Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Protect and Grow with Chicagoland certified financial planner Tim Stearns of TJ Stearns Incorporated. Trust, respect, and results. TJ Stearns Incorporated focuses on comprehensive financial planning and benefits.
And welcome into the program. This is Protect and Grow, Chicagoland Retirement with Chicagoland's certified financial planner, CFP Tim Stearns, president and founder of TJ Stearns Inc., here with us to provide the guidance, the insight, the information that we need to know in order to protect our assets and grow them. Tim, always a pleasure. Welcome back into the program.
Peter, thanks again for having me.
Always a good time, Tim. We appreciate the guidance, the insight, the perspective that you provide to Chicagoland area savers and investors. Much needed. I think you're hearing a whole lot of concern and worry right now about the future of the economy, the future of taxation, inflation. I mean, any number of things, the market. What are you hearing most about, Tim?
Well, I see a lot of people that don't really know what's going to happen. And, no one has a crystal ball, but I will say that, a lot of our clients are in income allocation and we have a written plan. So these hiccups that we see in the market and the drama that we see doesn't really get to them, because we have a game plan. And if you don't have a plan, you kind of still have a plan, by not, strategizing how you want to do things. So I think that the income plan will help people get through these choppy parts that we have.
Well, Tim, you've talked on the program before about how a financial plan, kind of generic, all-encompassing, an investment plan, sort of a specific type of plan dealing with only those assets that are in the market. And then the retirement plan is one in particular that a lot of people are actually missing. They think that they can continue just having the financial plan or the investment plan, but the retirement plan seems to be a very commonly overlooked component. Are you still seeing that to be true? And does that continue to raise concern for you?
Well, yes, it does, because I think a lot of people, you have your do-it-yourselfers out there, or people who just think the market's going to go up. And I don't think that that's a thing. The Fed has propped this market up, thankfully, but at the end of the day, it seems like smoke and mirrors to me.
So, Tim, as we are looking at the financial future, we have some concerns and worries. Having that income plan helps us to address many aspects in planning, but particularly kind of the number one leading risk, the multiplier of all other risks. Longevity is an issue that is going to be particularly specifically addressed with that retirement income plan, correct?
That is totally correct. We make sure that, longevity can be the number one killer of a retirement. People are living longer and longer. The average male, 85 years old. The average female, 88 years old. That is a really long retirement. And then you couple it with the fact that a lot of these people don't have pensions. They were the first, if you will, guinea pigs to the ERISA with having a 401k and not having pensions. So they don't have guaranteed income besides Social Security. And, they're not getting the cost of living adjustments that stay up with, things like inflation and that type of thing. So you really need to, walk before you run, but make sure that you're doing a plan that is going to be, a stalwart that will get the job done for you. And then more importantly, if God forbid you or your spouse passes away, you don't get half of the income suddenly and you're having to downsize.
Well, if you would like to get that plan put together, or if you'd like to revisit your plan to make sure it includes the critical component of a retirement income plan, pick up the phone, give Tim Stearns a call. He will put together a Protect and Grow plan with you and for you. It's a tangible plan that you can have in your hands, a snapshot of where you are currently. It will help you define your goals, get them in writing, and then Tim Stearns, a certified financial planner, will put together the recommendations, the action items that you should execute in order to achieve those goals. And all that can be yours, no cost, no obligation. It's a plan for your financial future. All you need to do is call 800-640-2256, 800-640-2256. And Tim, I know part of that planning process, you take folks through the 10 steps to prepare for retirement. All of these pretty critical.
Absolutely. So let's go through some of them. Number one, define your budget. It's scary how many people come into our office, or we're doing Zooms or what have you, and they really don't know what their budgeting is. The husband or wife is in the dark as to how much they're spending per month. Or define your sources of guaranteed income. A lot of people have not been on SSA.gov, which is a really easy website to look at what your record is, to make sure that, number one, that they have your top 35 years of earning, that you know exactly what you're going to be getting, because again, most people, in the baby boomer sect, do not have guaranteed incomes like a pension. Then define your income gap. If I need X and I've only got so much of guaranteed income, what is my gap? What do I need to have to make sure that I can pay my bills?
And Tim, essentially that boils down to, that's what your portfolio is going to be responsible to generate for you.
Right. Exactly. So, you need to make sure that you exactly understand what you're going to be getting every month, so that, you can look down the road. People say, I think I'm going to be okay. I'm hoping I'm going to be okay. You can't work in that. We want to work in absolutes that we know for sure that we're golden. The other thing we are doing for people is that we will run plans on the Social Security, excuse me, to make sure that we understand the amount of money that they're going to be receiving. Do they take it at age 62? Do they take it at age 66, 67, or do they wait the full retirement age, 70? Where it only makes sense to turn on then, because you don't get anything more from it. So what that does is that leads us to formulate an income plan. We also want to understand their risk exposure, which I talked to a gentleman the other day in my office. He was 63 years old and he was 93% in stocks, which is very aggressive. And he did not even realize that. So also talk about one of the biggest killers in retirement. We have to calculate taxes. You have to make sure you're understanding that, the IRS they have a plan for every dollar you've ever made in your life. So we need to make sure that we understand exactly where those dollars are going and how much is going to go to Uncle Sam. Consolidate like qualified accounts. I have so many people who come in here and go, I have a 401k at my old job and I have something over there with my IRA. I don't even know what's in it. So we make sure that we get people kind of streamlined so that they know exactly what they have. One of the things, the silent killer of retirement, we always talk about, we have to consider inflation. That dollar that you have needs to double every 22 years at least. And the Fed has said they're going to peg inflation at 2.5% for at least the next year.
Well, that's double what it had been previously, right, Tim? So,
that's totally correct.
They have stated, they are advertising, they intentionally are going to let inflation be twice as much as what they had been targeting previously.
Right. And then lastly, you got to review and update your legal documents. I got a gentleman as a client the other day, and he still had his ex-wife on some of the documents, that he had. And then not only that, but the state that he lives in the Midwest, he has to name his wife. And so he had his sons as a backup. So that doesn't work either. So, luckily we have an estate attorney on site here that, we can make sure that we get things under control so that we understand exactly what you're going to be having.
Well, again, going through these 10 steps to prepare for retirement, that is part of the Protect and Grow plan. If you're a saver, you're an investor, you are a planner, you are retirement minded, or even if you're already in the retirement community, running through these 10 steps as part of that Protect and Grow plan, and also talking about how to properly position and utilize each and every dollar and asset you have available. That is all part of the plan. Certainly worth the time. No cost, no obligation. Pick up the phone, give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. And Tim, along with the Protect and Grow plan, you do make another offer here on the program.
Oh, exactly. We're very happy to get the book Income Allocation, written by my good friend David Gaylor, 30-year veteran of this industry. It's a book that really boils down how to do the right retirement. And Peter, you and I have talked about that. You only get one shot at an ideal retirement. No one wants to go back to work when they're 75 because they ran out of money. Which reminds me, I also would love to get into anyone's hands out there the 8 moments that you should be moving your money around. And I was just going to launch into some of those. Is that okay?
Absolutely. Yeah, Tim,
All right.
you've got another report here that identifies 8 different times that we should consider moving our money. I know a lot of people are sort of considering some movements right now that are actually included in this list.
Right. So one of them is rebalancing. The market has gone on a holy terror for about 12 years. The gentleman the other day that I met with that had 93% of his money at the age of 63 in stocks only. That's a little risky, especially when you're getting ready to. This gentleman's getting ready to retire. Another opportunity that we have right now is Roth conversions. There's the opportunity to, as they say, pay on the seed, not the crop. So you could start to move some money over into a Roth, depending. And obviously we have a CPA here. We can take a look at what the tax bill is going to look like. But if I know that I'm 60 years old, I'm going to be in retirement, or my wife is for another 25 years, that's an opportunity. The other thing I love is that at age 59 and a half, you're allowed to take in-service distributions. So on your 401k and your profit sharing and all that good stuff, nothing changes. But we become, the captains of our own ship by moving the money into something like a self-directed IRA or through another advisor, and it opens you up to a whole world of other investments that are out there instead of being beholden to your 401k lineup.
Tim, let me step back a moment really quickly here to the Roth conversions, because I know right now on the minds of many savers and investors, we're worried about what taxes may do into the future.
Sure.
And so that Roth conversion, and in dovetailing into the latter point, that in-service distribution opportunity, these are times that we have available to us where we can begin to control our future tax liability and our future exposure to tax law changes.
Right. I mean, and not only that, but I had a couple in here just the other day that didn't even know about the stretch IRA going away, the Secure Act, what that did to them. That if God forbid something happens to the both of them, their daughters are going to have to drain the account within 10 years. Those are the things we can educate people on, and we stay up on it. We're doing continuing education all the time to make sure that we know exactly what's out there. Things that could be lurking in the shadows. As my dad used to always say, the devil's in the details, right?
Well, we don't know what those details are, but we certainly do know that a lot's being said about raising taxes for certain sectors or individuals, on businesses, big and small, and certainly on individuals with higher income, but also kind of in that conversation on dividends and on distributions. Tim, this is an area that kind of particularly affects retirees more than any others.
Definitely. I mean, and we have a lot of people say, well, I might not be in the same tax bracket. Well, when we look at them, like a budget, a lot of times we see that they're going to be the same. Maybe they're not spending the money on work clothes and that type of thing, but they're taking that trip that they've always wanted to do.
All kinds of tax increases are on the table right now, but particularly tax increases on dividends and capital gains. Those really could affect retirees, right?
Exactly. And we're dealing with that with some of our clients that are trying to reap some profits, and they're worried that they're, one of them has a property tax freeze in the Chicagoland area. So she's not paying a lot in taxes on, she's frozen, which is a nice thing to have. But, you start having some capital gains, or they're taxing them, or you start having dividends come in that's going to boost up your income. The next thing you know, you're going to have issues, trying to keep that freeze. So those are things that we help people with when they are, scared that they're going to lose some opportunities that they finally got to have. Those are things that we can help people with.
Well, again, if you would like that protect and grow plan, if you would like to look at how each dollar is positioned, how it's classified, how it's qualified, how to better control your tax liability into the future, how to minimize that or eliminate it even where possible, pick up the phone, get that protect and grow plan in your hands. Tim Stearns, a certified financial planner, will put that together with you for you. Make sure that you have specific direction and instruction on the steps that you need to be taking to achieve your financial goals. 800-640-2256. That's 800-640-2256. So Tim, what are a few of the other moments that we should consider moving our money?
Well, unfortunately, I've seen a lot of this where people are leaving a job, whether they are doing it out of their own volition or if they're just doing it because they got let go, reduction in force.
Right. I mean, it could be a good thing, but unfortunately,
Absolutely.
here recently, we've seen it a lot of times not voluntary.
Right. And so that's another reason to take a look at, that's an opportunity, that you can move your 401k. The next thing, I just ran into this, is that we had a couple in here that she had a 403b through a life insurance company, and she had no idea what her fees were until we actually called the company, and she was up around 4%. In addition, a lot of people don't know about reverse churning. That's a term that's come into vogue the last couple of years, where the advisor was just taking his fee, but really not doing anything actively to do it. And we have so many great articles that talk about how the buy and hold strategy really doesn't work in a volatile market. The other thing we saw in this person's account, underperformance. She wasn't beating any of the indexes that she's supposed to be mirroring. And 93% of money managers don't. So she's paying high fees. No one's watching the store, as they would say, and she's underperforming on top of it. And then here's one that comes together with that too. Your time horizon has changed. I have a sibling that was going to work another couple of years, and his company got bought pre-pandemic, and he, now he's on the sidelines. He's retired. Not really what he had planned, but now he's a super grandpa.
Well, again, Tim, all of these issues, all of these are times where people should consider moving their money. Now, it's not an absolute that you must, but these are the indications of, hey, something's going on, or you've got the opportunity, or you could better position your funds, your assets. Taxes may be changing into the future. You want to control those. You've got the opportunity to better position your dollars for that retirement income plan or other potential purposes. If you want to protect your money, if you want to grow your money, those are things that might require you to move it around a little bit. And you've got a list here of 8 times when we should be moving our money. And if somebody falls into one of these categories, probably an indication that it's time to make those considerations or speak with a professional.
Exactly. And then the last one that I always talk to people about is consolidating. Again, I've had clients come in here, or potential clients that, I have something over here, I have something over there with that guy. And, no one really knows what's going on, behind the curtain, as they say. So we take a look at the full gamut and make sure that we, understand how much risk, what the performance has been like, and of course, what are the fees.
So Tim, nothing that says that you can only have one IRA account, but also nothing that says that 10 is better.
Right. No, not at all. And, sometimes you might have a portfolio that's working against another portfolio. So make sure that you consolidate and get your story straight so that all the oars are going in the same direction, as they say.
And Tim, again, with the age 59 and a half opportunity to move your money, with having an older job where you've left an account behind, again, consolidating accounts, these are the times when that can occur. And then certainly just for peace of mind and ease of tracking, I think having a couple fewer statements showing up that you're paying attention to might be a little bit easier housekeeping item for those in retirement that want to simplify things a little.
Right. Or the other thing you see people, I haven't even opened those envelopes. I don't know what's going on in those accounts. Well, I mean, every dollar that you have there is your money. So let's make sure that we know exactly what we have baked in there,
Each one matters.
100%.
Well, ladies and gentlemen, if you feel like any of those maybe have described a situation that you may be in, or a category that may describe you, pick up the phone, give a call. Tim Stearns can help you with that. Identify if it is the right time to maybe make some proactive financial moves. 800-640-2256. That's 800-640-2256. And again, Tim, I know there's a lot of concern. I'm hearing it. I'm sure you're hearing it right now with, is the market getting ready to have another downturn? Are taxes going up into the future? These are, again, reasons why we need to look at where our money is and consider all of the options that are available to us.
Right. So we also talk to people about, what are the three biggest retirement expenses? Number one would be taxes, and if they raise the tax rates, it's going to be even more than that, than you're really planning on. One thing we see is most people are reactive when it comes to taxes. They didn't get ahead of it. So the Roth conversions or doing some other different things that you could be doing makes a lot of sense for some people.
By definition, Tim, isn't deferring and delaying paying our taxes reactive rather than being proactive? I know that we feel like we got a certain inherent advantage when we got to save money on the front end, but that leaves us completely to the whims of any changes in tax law. And therefore, we almost have to be reactive once we're already behind the eight ball.
Right. But that's why I think times like this, there's an opportunity there. When we teach the retirement classes at Roosevelt University as well as Harper College, there's a lot of opportunities to get ahead of that and start planning. If I'm 60 something years old and I'm more than likely going to live to be 85 years old, it's a 25-year retirement I'm looking at that maybe I could do something to get ahead of taxes. The next one that we talk about, the largest potential expense is healthcare. I have so many people that are might stop working at the age of 61, and they're very concerned about bridging that gap to Medicare. Fortunately, we do health insurance for people, and we also have we're certified in Social Security as well as Medicare. These are things that need to be looked at and addressed.
Well, again, if you would like the help, the assistance of a certified financial planner and the team of planning experts there at TJ Stearns Inc., pick up the phone and give a call. You can get that plan put together. No cost, no obligation. A number of different tools and calculators and reports are available. They will help you maximize Social Security. They'll help you plan strategically to minimize taxes. They'll help you maximize lifetime income. They'll help you protect and grow those accounts. That's the name of the plan. That's what they put together for you, that Protect and Grow plan. 800-640-2256. That's the number to call. 800-640-2256. 800-640-2256. Tim, we've already touched on this next one just a little bit, but inflation, probably the third largest expense in retirement, the silent thief, it's been called.
Right. One of the things that we have in our office is the 1976 series catalog. And in there, you can buy 4 tires for $200 installed. And so I like to show people that because just the other day I had to buy 4 new tires and they're over $800 installed. So there's a perfect example of something that happened just the other day that you can show people, look what it used to be, and now look at how much it is. We make sure that we're telling people we're going to increase your income by 3% every year to stay ahead of inflation.
But inflation is real, Tim, and the Fed has already said that they plan on targeting more than double the target rate of inflation into the next year to come. And so prices are going to be increasing. If we haven't seen that already, we're certain to in the very near future.
Well, yeah, and suddenly you're going to be paying, $10 for a cheeseburger at McDonald's, because they're moving minimum wage to stay up with this stuff. And I get what they're trying to do, but inflation needs to be put in check.
Well, again, if you've got questions or concerns about any of these things, a certified financial planner here to help and assist. He'll put that Protect and Grow plan together for you, with you. Pick up the phone, give a call, 800-640-2256. That's 800-640-2256. And Tim, when you're structuring that retirement income plan that we talked about, the income allocation plan, you're considering all of these things. The largest expenses obviously have to be factored in to that retirement income plan. Taxes, healthcare, inflation are the biggest ones, not the only part of that plan, though.
We consider everything. We want to make sure that we're covering every base because no one wants a surprise in retirement. That's the thing that I think makes us set us aside. And not only that, but we're cross-trained. We have an estate attorney. We have a CPA. We have our bases covered to make sure that there's no undue surprises.
Well, once again, Tim, the offer's on the table. Get a plan in your hands, an investment, a financial, a retirement plan designed with the help, the assistance of a certified financial planner, CFP, plus the book Income Allocation, an offer that you're making on today's program.
That's correct. Happy to do it. To anybody who has over $500,000 worth of assets, we will be happy to help them get the book into their hands. We have a digital copy as well. And then also, see if there's a way we can help them to have a successful retirement.
Well, Tim Stearns, ladies and gentlemen, Chicagoland's CFP here, willing to help and assist anyone taking their planning and their financial future seriously. Obviously, some strategies work best for savers who have a certain amount, who have been very serious about saving, investing, putting money away for their financial future. But again, Tim willing to help anyone. So if you've got questions, if you've got concerns, if you would like to get that plan put together, pick up the phone, give a call, 800-640-2256. 800-640-2256. If you do have over $500,000 saved for retirement, this book, Income Allocation, absolutely critical for you to read and understand. It will help you address many of the issues that we've discussed on today's program. If you're worried about where the market may go into the future, if you're worried about where taxes or inflation may go into the future, you got to have a plan, ladies and gentlemen. That's the bottom line. Pick up the phone, give Tim Stearns a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Tim helps savers and investors better determine their financial outcome through specific planning, make those goals realities, have that plan in place, specifically that Protect and Grow plan. It'll help you learn how to retire, how to maximize your income, how to minimize your taxes, how to protect and grow your wealth and assets. Tim, we always appreciate your time on the program. Thank you for being here as our resource. And we always appreciate the guidance and perspective that you give and provide to Chicagoland area savers and investors.
Appreciate you having me, Peter. Have a good one.
Again, he's looking forward to hearing from you. Give him a call, 800-640-2256. Get that Protect and Grow plan in your hands. We'll talk to you next time.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program on 890 WLS every Sunday at 11 a.m. and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.